You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. If I sound a little bit different, because I'm not coming to you from our studio in Chicago, I'm actually down here at the Securities Traders Association Market Structure Conference here in very scenic and quite sunny and warm Washington, D.C. You know what that means? That means we're at a conference. We have another great slew of guests lined up for you, including our next guest. He's a newcomer to the program and indeed to the network. He is Robert Boylan, the Managing Director of Institutional Equities and Derivatives over there at INTL FC Stone. Robert, welcome to the Options Insider Radio program.
Well, thank you for having me. I appreciate it. I'm thrilled to be your first guest from INTL on, and hopefully I can say something of interest.
Yes, you bring up a good point. We haven't had anyone from your firm on. Let's start off, as we are wont to do with all of our first-timers here on the network. Why don't you go ahead and give our audience a little bit of an overview of your background and how you found your way to FC Stone?
Sure. Yeah, no, I appreciate that. It's an interesting path that I took, and I think it's probably pretty similar to many who are still in the business at my age. But I started off at a technology firm, Bloomberg Financial Markets.
Never heard of them.
At a university. Spent a good number of years there, close to a decade, learned a lot about technology, trading technologies. From there, ended up over to Credit Suisse back in the days of AES, where we were pioneering, really one of the first big bulge bracket firms to really pioneer electronic equities trading and algorithms. It was a great run. We started building out options as well on the electronic side. It was a great, very interesting place to be, kind of forefront. From there, I moved over to go work at Goldman Sachs, doing something.
Never heard of them either. You all these no-name firms you worked for, Robert.
Doing something somewhat similar, where I ended up working for a guy who worked for me at Bloomberg, and it was a really interesting move. That being said, keeping the technology in the family there of kind of the background. Ended up on the electronic side there, on the derivative side as well as equities, really running the broker-dealer business and our dark pool business over there, servicing not only our broker-dealer customers but our correspondent clearing client base that we had and ultimately our prime brokerage customers as well from an execution perspective. Fast forward, spent a brief stint at a listed derivatives electronic firm. From there, just to fine-tune some skills, and then had a long-term relationship with these guys at INTL FC Stone, and they were at the brink of really, I think, exploding and getting into a lot of different areas. We'd spoken in the past, but the platform was pretty small at the time. Fast forward, with all the things going on, I thought it was a good opportunity to get involved where I thought I could add value across a lot of channels. So here I am. All those things that I thought might happen at INTL seem to be falling into place. So it's pretty interesting, and I'm thrilled to be here.
Well, Robert, like I said, this is the first time we've had someone from INTL FC Stone, a lot of acronyms in there, on the program as well. So maybe some of our audience not familiar with what you guys do. Why don't you give our audience a little bit of an overview of what is your firm? What do you guys do?
It's a good question. So first of all, I know the name's a mouthful. Even for us, we debate, do we call ourselves INTL, FC Stone, the full thing? I still go with INTL FC Stone. So fast forward, I like to say, and I say it many times, we're probably one of the largest financial institutions many people have never heard of. We're a Fortune.
It's a good tagline. I like that.
We're a Fortune 500 firm. We're pretty close to being a Fortune 100 firm, just outside the inside. Publicly traded. When I started, we were 1,800 people, and that was a year ago when I joined. We're at 2,100 now. We're growing pretty rapidly. We're well capitalized, and we really traffic in three main areas. We have a global payments business, and we're quite large in that. We also have we're probably the largest non-bank FCM out there on the future side. And then there's the third component, which is essentially our securities division. So it's whether it's equities, fixed income, trading, the full gamut of FIC, et cetera. Within that, we now have prime brokerage. We've launched a correspondent clearing business. We've bought retail businesses, so we're growing that as well. So we do everything from FX prime to traditional prime, et cetera. And these are all pretty new businesses for us that we're trying to launch and pull together. The last thing I'll say is we're not super well known because we're really not a banking firm. We're not a big research firm. So we're more really kind of an execution firm, if you will, on a lot of levels. So
I guess the answer to that, what you guys are, is yes, we do that. Yes, we do that. We do that. Yes, we have all of that. So it's just a smattering of pretty much all of the above is a good way to describe it. A lot of people probably know you from your commodity side. Would you say that's still a large focus? As you kind of mentioned, you have other arms out there. So are the commodities is that kind of maybe the older view of INTL FC Stone?
So it's a good question. I think if you're in the commodities business, you know us. Global payments business, people aren't very familiar with that, so that's kind of on the side. It's a big business for us, but in terms of name recognition within the securities industry, it's probably not as important in terms of people getting to know us, even though it's a very important business to us. But certainly the FCM and the commodities future side has been where people know us. We've had we're the number one market maker in OTC names, ADRs specifically. It's a large percentage of the market on a daily basis. So if you traffic in a specific space historically, being that OTC ADR business, you would know us. There's no doubt you would. That being said, we've since grown from being kind of a real specialty boutique shop to, basically having, everything in FIC world, governments, corporates, municipals, mortgage backs, repo, money markets, you name it. So we've all of a sudden gone from, very boutique-ish to full service across the board. Not to go on and on, but we've also, as an offshoot of the ADR business, we've become quite experts in trading globally in order to hedge those books. So that being said, we're now offering our expertise on a global basis through a 24-hour trading desk, and we basically access every market across the globe, across Europe, LATAM, Europe, Eastern Europe, et cetera. So we've been able to take some things that we've done very well, package them, and start offering them out to our customer base. And that also, onward, allows us to support our prime initiative, our clearing initiatives, et cetera. So we can offer futures, we can offer FX, we can offer the gamut of fixed income, we can offer derivatives, so listed derivatives, and then obviously equities as well, what we do, what we're known for. A lot of those, interesting enough, and what's exciting is sort of new. We're piecing them together, trying to see, it's like a puzzle, how do they all fit together, and we have a very supportive management team that's very good about funding us and actively growing and supporting us. So it's a long-term vision, but it's a fun place to be.
OTC ADRs, that has to have been an interesting side of the market, I have to say, over the last couple of weeks in particularly anything that touches China. Just give our audience a real quick overview. What has that been like for the last couple of weeks? Especially last Friday, all of a sudden, they're going to delist everything? I've never heard of such a thing. So that must have been a wild couple of weeks for you guys.
Yeah, it's pretty exciting in that sense, because what happens with these OTC ADRs largely is people that want to access these local markets, but many times either they're restricted to trading in the local markets, but they want to get exposure to them, or using ADRs to get that exposure in the U.S. and U.S. dollar value and denominations. So it actually, for us, it's been pretty interesting, because if the access directly to those markets gets kind of restricted, it's going to be better for the U.S. products, because people are going to have easier access to trade locally. So it's been incredibly busy, particularly in Europe, or in Asia, but it's just one part of our business, but it's been pretty interesting for sure.
Especially the ones you have to put up OTC. I'd imagine they're probably not the most liquid of names. So you guys are probably the liquidity and then beginning and end of it. So yeah, it must have been an interesting challenge and maybe an opportunity for you guys over there as well, as these things were just moving all over the place over the last couple of weeks.
For sure. I mean, anybody who's in this business, us included, it's a big capital commit business. So there's a decent amount of risk that goes with it. I mean, luckily for us, we've been doing this for 20 plus years. We're good at hedging that risk and managing it. But we'll cover carry a book of 1,800 positions in these names across the gamut. Luckily, we have some of the best traders on the street that know how to hedge this out and manage that risk effectively, and hopefully, make a little P&L along the way, preferably the P than the L. But certainly, we've had a good track record there.
Well, we're obviously down here at the Securities Traders Association Market Structure Conference. Say that 5 times. I dare you. What brings you down here?
We've got a story to tell, and I think it's basically what I just recapped with you here. I mean, we're getting into the clearing business, and I should say we're in the clearing business. We're growing our footprint in the clearing business, offering more and more, and execution services. We're new to the prime business. We hired an industry veteran who, basically started Convergex's prime business, went over to Cowen. I mean, it's a very well-known guy, and we have a great reputation in the space already, so we're building that out quickly. We're going to be launching an electronic options business starting first quarter of 2020. So we're in the process of getting that in place today. So we do have a high-touch options business on the vol side today, based out of Chicago, but we're going to be complementing the rest of our suite with a low-touch options business, which I'm involved in as well. So the options, the clearing side, the market making side. I mean, there's just a lot of things here that are really interesting. Luckily for me, I think I've been able to add some value across the gamut, but there's a lot to do.
Obviously, my ears perk up when you mention the electronic options business coming next year. We just had some other guests in here earlier. It's kind of been a theme that, we saw an early round of players in the brokerage space in options. One by one, they've kind of all been gobbled up by other large entities. And now we were just talking recently about, is it time for the new wave of entrants into the space? And it does seem like that is happening. All of a sudden, firms are making more of a concerted effort to get back into the option space. So tell us a little bit what you can. Obviously, it hasn't launched yet, but give us a little bit of a peek behind the curtain. What brings you to the option space? And obviously, you're playing in different aspects of it now, but what brings you to this electronic side, and what are you guys planning to bring to the table?
I mean, look, we're trying to round out the suite of offerings that we have out to our customer base, right? And the one glaring hole right now truly is electronic options. I mean, we can do the high-touch side. We can do low-touch across the gamut. We can trade globally, whether it's futures, whether it's, equities, across the globe at this point. So the one thing that's glaringly missing is the vol side of it, so the listed derivatives. So that being said, it's interesting that firms are in and out of it because the space has matured from an electronic perspective, even though there's a handful of players in there that seem to really excel. Being a last mover in this, if you will, I like to think of it as kind of this last mover advantage that we can leverage out.
You can see what's come before you, right?
Yeah, exactly. And we can leverage technologies where we need that. People have actually put a lot of work into it and, kind of leverage technologies, put our own IP into these, strategies ourselves and do it in a way, get into it for much less than the original pioneers were. And we can offer a product that's every bit as good, if not better. So, that's kind of the idea. We have a number of people with strong backgrounds there in order to service completely, again, the prime, the clearing. We have a big LATAM business trading northbound. We want to be able to put our own products in front of these guys on the electronic side. And again, it's not, with a lot of partners out there in technologies and sort of our own IP and infrastructure that we have, we can get into it pretty quickly and offer a really best-in-class service right out of the gate. So,
it's funny, the electronic options audience is a notoriously fickle one. They're a very demanding one as well. They expect a certain level of bells and whistles, right? And if they don't have it, they're not shy. They're not reticent about jumping ship and moving to the next one. So I think you're right. And from that perspective, maybe going in last, you can see what has come before. You can see what the table stakes are, right? You can see what the bare minimum your offering has to be. And then hopefully you improve beyond that. You can have something that's going to attract the bleeding edge, the most demanding of that clientele, and then that'll trickle down, obviously, to the mid-tier and below. So maybe from that perspective, it isn't a bad time to be diving into the space anew.
Well, I think you're right. I mean, the vanilla stuff is the vanilla stuff, right? There's pretty straightforward, and there's a lot of guys who can do it, and obviously we'll do that well as well. But being able to leverage some of the vanilla stuff ourselves will allow us to focus on kind of the more sophisticated strategies and unique offerings. So that's our idea, and that's kind of the value that we're going to bring as well. So, we'll obviously service the standard, pretty straightforward evolve business, if you will, but we're really looking to kind of put a twist on it and give some uniqueness to, as you're saying. And I think being that last mover gives us that advantage to say, what are some of the needs? We're not encumbered by, legacy technologies, and, we can leverage partners, as I said, to make it really efficient. So we're pretty excited about that, to be honest, that space. And again, I think Q1 will be launching with a product. We look at it, as one of the big holes that we have in our offering as a whole, but it's one that's very solvable, and we're going to be there.
Brokerage, obviously very much in the focus in the last 24 hours. Who'd have thought? But that's the talk of the entire conference. No one can stop talking about it. Obviously, Schwab and a few other big firms have made some noise in that space by deciding to go the Robinhood route of the zero commission. What do you think about this brouhaha in the brokerage space? It sounds like you guys are going after maybe a little bit different clientele, but is this an area of the space that interests you, or you think about playing there, or are you going to leave those guys to their own devices?
We're pretty focused again on the OTC ADR market making space. So we are market makers in that sense. So we do compete with the wholesalers in general. But, I think that world, which was going to zero commissions, is going to affect a lot of other people a lot more than us. In other words, we don't really have intention of getting into the listed market making business, whether it's on the equity side or in the derivative side either. So we will continue to be customers of theirs. Of these wholesalers, if you will, and then these retail platforms. Look, let's face it, the retail platforms are able to come down to zero because when they're out there with their flow, they're probably getting paid for it, right? So it's kind of a misnomer to think that it's still zero. They're not charging their end customer, but in essence, they're still getting typically paid for it. There's a number of firms that won't accept payment, but there's certainly more than a couple that will. So, there's still revenues for these guys to be made. We're not, even in our retail business today, which is the old Stern AG retail business, we charge commissions, but we don't accept payment for order flow. Our policy of our firm is not to accept payment for order flow or to give payment for order flow. So we're a little bit unique in that sense, I think. But we do think we'll be on the right side of history on that. I don't know how long that can continue to go on for. I mean, it seems to have been around for a long time and may persist, but we're trying to think a little bit forward on that. So no, it's not, we're not looking to get into the zero commission business. We'll still interact with the wholesalers the way we do for the businesses that make sense to interact there. Our wholesale business, our market making business, we're price competitive as it is. And our business won't change much on that front.
So this won't affect how you shape that forthcoming electronic options offering then?
You know what? I don't think so because, our customers are going to be generally not those retail customers. It's going to be more the institutionalized customers that we're going to be doing something a little bit more than, what the retail lot sizes are, if you will. So it's probably not going to shape our strategy.
And obviously you mentioned day-to-day you do a lot of institutional equities, but also derivatives are in your purview. It's a pretty broad purview. OTC ADR, something that's getting a lot of your attention right now. But outside of that, what is it that really is lighting up your tape these days? What is the institutional managing director of derivatives over there at INTL FC Stone? What is he spending his days on these days?
Well, look, like I said, we're very focused on rolling out our electronic platform, which takes up a good amount of time, right? We've hired a handful of high-touch options traders sitting in Chicago now, so that's an interesting piece. Very clearly, they don't report to me by any means. In fact, they're not within my world, but we focus a lot more on the electronic side of the business. So between that, we're actually developing and rolling out our own electronic equities platform as well for algorithms. So we've launched that about 3 months ago. And again, a lot of this is originally to service, the prime, the clearing, our LATAM, our, basically our institutional customers as well that we have on a traditional institutional equity basis. And again, we had a last mover advantage there. We were able to leverage some technologies that exist to put us right in the game very quickly, put our own spin on it, our own flair, and it's been well received. Luckily for us, I will say this has nothing to do with me, and over time maybe I can take some credit for it. But our firm is a very customer-centric firm. We put the customer first in all cases. We are very well known for our customer service and response. And luckily, I'm at a firm where people want to do business with us. They want to do more with us. They say, how can we do more with you? And with all these product offerings we're coming out with, we're able to start offering more and more. So, I think we lead with customer service, quality of execution. And as we continue to roll out products, if we continue on that path, we'll be successful because, as things come together and performance gets tight amongst various providers and, look, back in the day, VWAP and equities, Credit Suisse's was better than Goldman's. Nobody talks about whose VWAP is better anymore. It just doesn't happen. And that's happening across a lot of the asset classes. But what does matter is, you're willing to stand stand up and help somebody who has a problem? What's your response time? Can you guys, if you hit risk limits, can you turn that around in a matter of a minute or two to get risk limits raised? So you really service these customers. And that's what we're really good at, and that's what we're known for. So, we're focused. We're a trading firm, right? We're not a banking firm. We're not a research firm in theory. So we're not doing trading to service the banking clients. We're doing trading because that's what we do. So we service them as our customer, and that's the reason they're our customer from an execution, clearing, service standpoint. So that's what I'm excited about. I'm excited about building out new asset classes where our clients can do business and continue to service them at the highest level where, they want to continue to do business with us.
Speaking of new asset classes, at this conference last year, even though it's an equities market structure conference, I'd say the lion's share of the guests who wanted to come on were all in the crypto side of the space. Fast forward a year, and there still is a lot of interest in that space. Obviously, it's moving around quite a bit. I haven't checked it today. Who knows? You wait 5 minutes, it's moved 500 handles. Who knows where it is right now? But I'm curious, is this a product area of interest to you guys over there? Is it something you guys are looking into and maybe trading aggressively, or are you still kind of playing wait and see?
We're certainly on the wait and see side. I mean, we're keeping an eye on it. It's not forefront for us by any means. We have a lot of other things we want to do. We think it's interesting, but I would say it's certainly not. It's not on the plan anywhere to make any movement in that space. So I think we're kind of a little bit different in that sense. We're much more just kind of waiting and see. We're more of watchers in that space.
Well, it's working out on the option side, right? You get to have the last mover advantage. Maybe you'll have a similar advantage
Time will tell.
in the crypto space as well. Well, Robert, I'm glad we can get you guys on to get a little bit of a peek into what goes on behind the scenes over there at INTL FC Stone. But that said, if there's something, we had a pretty wide-ranging conversation, but if you think we left something out, or maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what's to come over there at your firm, now is the time, sir. The floor is yours.
Well, thank you. Again, thank you for having me on. It was a pleasure. Look, I'm hoping that, I started off saying we're probably one of the largest financial institutions that nobody's ever heard of. I think in the next year or two, we'll be one of the largest financial institutions that a lot of people are doing business with, and we're very well known. So I think if we continue to put out quality product, quality service, I think we're going to make some noise. I think over the next couple of years, we're going to become much better known, and I think our business is going to continue to expand across the board. And it's an exciting place. It's good people. It's good product, and I think we're going to put all our effort in across all the asset classes, and we'll be successful.
Well, Robert, we certainly wish you luck with the OTC ADRs in the coming weeks. I don't think that tumult is over by any means, and we'll certainly keep an eye on how these new initiatives, including this electronic options initiative, how it unfolds in the marketplace in the coming months.
Thank you very much.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.